What's good? It's Dave, and this is your Ottawa real estate market update for July 2022. Let's dive right into this and try to keep it short. Last month, we sold a total of 1,508 homes on the multiple listing service. That's way down compared to last year of 21-22. It's also way lower than the 5-year average of 1966. Demand really has dropped off. More on that in a second. If we look at the average resale price of a condominium is $438,977, and a residential on average is $772,861. They're saying that's an increase of 1% and 6%. Let me show you some graphs to better illustrate this. Give the video a thumbs up if you love graphs as much as I do. So this is an interesting graph. This is new listings by week. New listings, homes being added to the market. If we look at the blue line, that's 2019. That's pre-pandemic. And then the orange line was 2020. There's the drop in March of 2022, the state of emergency, and the whole world tried to respond and figure out what's going on. But the real estate market really took a dive there. And then in 2021, the red line is more or less returning, back to normal, and then so is the green line. So both last year and this year, in terms of new inventory, homes being added to the market, homeowners are adding they're back to normal. Homeowners are selling their homes just as frequently as they were pre-pandemic and post-pandemic. But if we look at sold properties, this is buyer activity. If we look at the blue line, there's our normal seasonal activity. The orange line was all wonky because of COVID-19. And then the red line, things returned more or less to normal. And then green line, it started the year kind of normal, but then somewhere around March and April, it really started to deviate from the normal trend. And if you look at the difference between the green line and the red line, or the green line and the blue line, it really shows that buyer demand, or the number of sold properties specifically, really dropped off. And so this is the laws of supply and demand at work. When supply is consistently high, but demand takes a dive, well, what's going to happen to prices? Prices are naturally going to fall. And if we look at pricing, blue line was pre-pandemic. Even during the pandemic year of 2020, the prices still went up. The orange line was higher than the blue line, and the red line was really up. The gap from one year to the next, that was really a big jump in 2021, huge appreciation. And then the green lines kind of started the same way, right, where the green line was way above the red line. But then as somewhere around March, April, this green line starts to go back down again, and this is representing prices falling. And if you look at today, it's actually much lower than it was, let's say in February, March, 8 weeks in. So that was maybe the high point of the pricing. That was the peak market. And then since then, that green line has steadily declined a little bit. And it's really interesting, in the last month, that green line has now dipped to be around the same spot as the red line. What that means is the pricing is back to where it was a year ago. Another way of saying this is we've undone an entire year's worth of appreciation. All right. So yeah, prices went up and up and up, and you can kind of say it got carried away. And now there's been a bit of a correction where it's now undone a full year's worth of appreciation. Something else that happened during that time is around March and April, the Bank of Canada had two different interest rate announcements. Each time they went up 0.5%. When they increase interest rate, of course, that cuts right into buyer affordability. It cuts into buyer demand. Fewer people qualify. It's much more difficult to get approved for a mortgage. But what's really interesting is today, July 13th, the Bank of Canada made another interest rate hike, but this time a full percent. So pretty dramatic action taken by the Bank of Canada in an effort to fight inflation. And so it's reasonable to expect that's going to cut into affordability. It may impact buyer demand even further. It would not surprise me to see this green line that the price may dip even further in the short term. I say short term because I think the long term, real estate is a very safe investment class or investment asset. And it's because it's a real asset, it's sheltered from inflation. If it's true that we're in a high inflationary period, it means our Canadian dollar, the purchasing power of that dollar continues to erode. It just takes more of those same dollars to buy real assets, just like real estate. So in the long term, real estate most certainly is going to go up again. It's just a matter of when will that, kind of this correction kind of plateau. And I don't think we're in a bubble. I don't think this is the floor is going to fall out from under us. Yes, the prices might dip a little bit further, but they can't go that much lower. I think prices are anchored as well by new construction homes. Builders, the cost of construction has gone up. Inflation, prices of construction materials has gone up. Therefore, new home construction prices must also go up. So I would say don't focus on timing the market. When is the right time to buy? When is the right time to sell? I know the old adage, buy low, sell high, but I would just steer you away from that thinking and get you to focus on time in the market, about getting your home, getting into real estate, having equity into a home, riding it long term. You need a place to stay. Real estate serves as a place for you to live, but it also serves as an investment vehicle for you. And in the long term, it most certainly will go up. Who's going to benefit most from this blip in the market? And I would suggest anyone who's looking to upsize, now is a fantastic time. Let me give you an example. I have a young couple looking to sell their small condo, and maybe 4 months ago we would have been able to sell it for $400, but reality today we might sell it for $360. So you could view that as, you know, we've lost $40,000, 10% of the value of this condo. But they're going to upsize, and they're looking to buy somewhere around the $800,000 price range. But those homes have also dropped by 10,000 or 10%, so it's actually closer to 720,000. So they may be losing 40,000 on the sale, but they're saving 80,000 on the purchase. They're going to be net $40,000 up. So if you've ever thought about upsizing, now could be a really good time to explore that. If you're just curious about the value of your home or the pricing in nature, in general, please reach out to us. We'd love to have that conversation with you. We love these conversations, and we'd be very happy to give you a free market assessment. So please reach out. If you found this video helpful, give it a thumbs up. Do all the YouTube things, like ring the bell and all that if you're watching there. If you're on social, make sure to follow us on all the different social platforms. We'd love to stay in touch with you. Thanks so much for watching. I'm Dave Robertson, your real estate professional for life.